Hello, everyone. Thank you all for joining us today for our Automating Consumer Use Tax using Avalara. My name is Lauren Hogan, and I'm a Regional Marketing Coordinator here at JMT. We're very excited to have Diana DeBello and Maria Tringali from Avalara joining us today. Just a couple of housekeeping notes before I turn it over to Maria. If you have any questions during the webinar today, please go ahead and submit them into the Q&A section as you think of them. We'll save them all until the end of the presentation, but don't hesitate to submit them as they come. Also, just a reminder that we'll send you both some handouts and the recording of today's webinar within 24 hours after it has concluded. And with that, I'll go ahead and turn it over to you, Maria, to get us started.
Wonderful. Thanks, Lauren. We're so happy to be here. My name is Maria, and I'm here with Diana. You got the two Italian girls with you today. So I've been with Avalara about 7 years, and the whole time I've been here, I've been working with our B2B customers that or those that are highly exempt. So if you sell to customers that want to be exempt, and also those who purchase and want to be exempt. So it seems to be my world. I provide a lot of training and education for our prospects, our sales team, and definitely work with partners like JMT on educating their staff and their customers on some of the compliance issues that are certainly more complex. And we didn't go into business to understand tax compliance. So that's why you get me and Diana. Diana, you want to introduce yourself?
Sure. I am so happy to be here today with you, Maria, to talk about consumer use tax. I am a person that loves to talk about sales and use taxes, so I'm happy to share some of my knowledge today. I have been in this industry for over 25 years, working in various industries. I've worked in the tax technology industry. I've also worked in industry managing their tax technology systems. So it's been a great experience, and I am thrilled to be here at Avalara. I've been here for about a year now. So as I tell everyone, I save the best for last. So with that, Maria, you want to go through the beginning of our slides here?
Yeah. So we're here to talk about consumer use tax. Again, not something I went to school to learn and love and talking about or even trying to understand. So let's start with what it is, right? And why it's important and how it affects all of us. You want to go to the next slide? There we go. Right. So we think of sales tax. I do a lot of these, and we think of sales tax as really only the thing that you see on a receipt when you buy something. And when you're in business, you both sell things and buy things. So you have to think of tax compliance really from both directions. So the use tax is what's owed by you when you're the buyer, and sometimes the final correct amount of tax was not paid at the time of purchase. We're going to talk about a couple instances, a couple specific scenarios where that takes place. But you want to make sure as the buyer that you are paying the right amount of sales tax on your purchases or accruing that properly, in addition to making sure that you are charging your customers the right amount of sales tax. So this stuff can get complicated. So in the sales and sellers use tax, you get to determine what the rate is by what you're selling to your customer. So that's again what I usually call the sexy part of sales tax, is that's what we all think of when we think of sales tax compliance. However, when we're buying something, we also can be in the driver's seat of what that sales tax rate should be and why. So we do have a responsibility as buyers to understand how we're being charged tax and when we're being charged tax. And often that responsibility falls on the procurement department and the accounts payable department, rather than the marketing team or the sales team that's doing the selling, or the accounting team.
Or the tax team.
Or
if
the
you're
tax
large enough for tax. Yeah.
Yeah, correct. And so it is kind of hidden sometimes in the company. So when you're selling something, you have to collect the tax and file a return, and you're a pass-through, right? You're collecting the tax for the state and on behalf of the state and remitting it to the state. When you buy something, you also have to pay tax and reflect that on your sales tax returns. So whichever position you're in, it is still part of your overall tax compliance. Would you add anything to that, Diana?
Just that it's sometimes easy to forget because you have to rely on your vendors to bill you on that sales tax. And if they don't, then that creates that liability for you to accrue it.
Yeah. Yeah. I think if you click next, this slide has a
yep.
build to it. Yeah. So at the time of a sale, when invoices are generated, that's when you need to charge the tax. But when you purchase something, you may or may not pay or accrue the right amount of tax at the time of that purchase. So use tax can actually come into play at many different times, often after an invoice is even paid. You may buy something and provide an exemption certificate and pay no tax and have to accrue for the tax later. Or you may buy something and pay tax, but it may not have been the right amount of tax. So it really can get complicated because it happens at different times during the process on the use side, where selling is pretty straightforward, happens at the time of sale. So that's why automation can really, really help here. And that's what we're talking about today.
Great. So what, go ahead.
All right. So what makes consumer use tax so difficult? As we just said, it's a constant battle, and buying things, other companies can actually expose you to liability based on how they charge tax or based on how you agreed to purchase that item. Growth, expansion, new business entities, new products that you sell where you're purchasing changes, all these things can really affect how you manage use tax. It's an ever changing, sort of ever evolving responsibility. Purchasing, we're going to talk about this a little bit later. Purchasing is not often centralized and controlled. So you've got people out there in the field, most likely purchasing things, and they're not a Diana. They don't specialize in this use tax world and understand when we should pay and not pay sales tax. So it becomes something that's a little tougher to control than your invoicing platform that is creating invoices all the time. And as I said earlier, the use tax liability can really surface after an invoice is paid. And that's what makes it really hard and also risky. If you're not paying attention later, then you can create risk for yourself in a sales tax audit. You can create underpaid, overpaid. Diana and I were just on a call this morning. There's all sorts of scenarios that can happen if use tax is not handled properly from a risk perspective. So the challenges really, before I turn this over to Diana to talk about some specific scenarios, are that use tax is really complex and it is subject to change. As I said, it requires ongoing research to understand how things are taxed, where things are taxed, how your different products are taxed. If you have different sites, which I assume you do, if you're sending something out to a different site, the tax rate is different than where you purchased it. Integrating and automation can be difficult. There are different triggers at different times. So you want an integration platform that allows you to do some checks and balances, maybe set up some rules and correct what you need to correct. When I talk to customers, I always say, you can't just automate use tax because the software doesn't know when you want to accrue use tax for something, meaning it doesn't know how you are going to use that item. So you do have to get involved. So that can be challenging, and doing all of that manually can be really, really complex. And lastly, audit risks for use tax are very high. As I mentioned earlier, I've been working with B2B customers for many years, and they almost always tell me, we had an audit, but the only thing they looked at was use tax, or our biggest hit was the use tax. The sales tax rates are pretty easy to get right nowadays. Those are out there. There are a lot of platforms that allow you to calculate your sales tax rates to your customers, and you can get pretty darn close. Auditors know that missing exemption certificates is an easy way to get people, but also use tax because it's complex. So if you're in a business that has use tax, that is complex, that has sites, that has products that you sell that vary in taxability, automating use tax is a really, really wise thing to do. So with that, I'm gonna let Diana dive into some specific scenarios.
Great, thanks, Maria. So as Maria was explaining, use tax is a challenge for businesses for a couple of reasons. So I'm going to go through some scenarios that are going to highlight some of the challenges and can identify some of the opportunities to help resolve that or minimize that risk. So the first one is purchases from outside the use jurisdiction. And this is frequent. And even as a private consumer, you probably have exposure to this. So I live in Pennsylvania and I'm not too far from the Delaware border. So when people in my area want to make big purchases, large furniture purchases, whatever, they'll often go to Delaware to purchase it tax exempt. Technically, they are supposed to claim that purchase and accrue a use tax and pay a use tax on that purchase to the state of Pennsylvania. Now, private citizens, people typically don't do that, but there are numerous states that do have a use tax line on their income tax, state income tax. And some states even put an estimate in there that they estimate like $500 a year in use tax. So it's important to understand that when you purchase something out of state and bring it into a state where it's going to be used, the tax that should be considered is where that item is going to be used. So what does that mean to a business? So if you paid sales tax on that originally in the state where it was purchased, what was the rate? Did you pay more or less? If you paid less, you may owe some money to the state that you're using it in now. If you pay more, then you may be subject to a refund. But getting that refund can be a challenge. So then if there are poor invoice details or no invoice, I hear on most of my calls, oh, we have, management people going out making purchases on their credit cards all the time, and tracking those purchases and making sure that tax was collected is difficult. So making sure you can get that information from any credit card charges. So it's important to get those receipts from your employees to make sure you can accrue for the use tax if tax is not charged. And as I mentioned, paying the wrong consumer use tax based on the location of use. So you need to really understand where it's going to be used. The next situation is going to be a change of disposition, the use or the location of a good. So when something moves, how the materials are being used can change the taxability. So if you purchase in one location and send and use items to another, excuse me, I had to sneeze, I apologize, then it could result in a distribution of the tax. So I'll commonly refer to this to a tax allocation where a company will centrally purchase goods, say 100 laptops for headquarters in Washington, and then they send 25 laptops to their employees in North Carolina. It's important to understand the rates because if the tax rate is higher, then again, you may have an opportunity for savings. Buying materials that are exempt and then using them in a taxable manner. I used to work for a company that did a lot of, in the good old days when they would do books on paper, they provided research tools in books. And in those days, they would purchase paper for resale because they would use the paper to make the books for the research tools. But all of the office supply paper was also purchased from the same vendor. So they had to create a process internally to capture the amounts of paper that were used for office supplies. So office supplies is a big place where consumer use tax can apply, especially if you are an IT company selling to other companies, or if you're just pulling things out of inventory for your own use. So that's one example of that. Contract terms can trigger a use tax event. So depending on the terms of the contract, whether it's a fixed bid, so if it's a lump sum contract versus time and materials, so the services are broken out separately, that can trigger whether or not a use tax is required. And this comes into play a lot of times in capital projects where you have contracts with your builders or your vendors, and determining when that tax should be charged and when it's not, and how it's being incorporated into your building. So an example that I like to talk about is purchasing SaaS software. So SaaS software is software as a service. So it's a cloud hosted type solution. There are many types of solutions that are used, like a CRM, a customer relationship management solution. So it's easy to overpay or underpay the tax based on the ship to from the vendor. So if I purchase from a vendor and I have employees located in Seattle, California, and Texas, and the headquarters is in Seattle, that vendor is going to charge me 10.1% sales tax. However, if I have employees from my employees in California, the portion or the allocation of that software use would be exempt. And if I have employees in Texas, the allocation of the software use in Texas would be 80% of that taxable base. And of course, the rates are probably lower than 10.1%. Seattle's a pretty high percent for sales tax. So it's important to understand where your goods and your services are going to be used so you can evaluate these opportunities for savings or limiting your exposure. Because the converse also exists where if you purchased in California and your vendor didn't charge you any tax, and you're allocating the use of that SaaS software to places like Seattle and Texas, you should be accruing use tax for those locations. So here is 2 real life examples that we have come across in dealing with our customers. So the first example is a company that has 140 locations and allocates their SaaS software licenses to users across their different locations every month. So this is going to affect the consumer use tax rate and how it's calculated despite the origin of the purchase. So the other example is a construction contractor that has approximately 90 employees and $200 million in revenue. They conduct business in 12 states with offices in 4 states. They issued a resale certificate in purchasing business building materials for their project, but did not self-report the use tax. When they were audited by Nevada, the auditor assessed them $475,000 in uncollected use tax plus the penalties because they did not accrue the use tax on the materials that they purchased for building materials for their projects. So how is it managed today? So we're going to look at the ways companies deal with it today. And there are a variety of ways that companies do manage. And if you say we struggle with this, you're not alone. So the strategies to manage consumer use tax varies wildly. There's the ever popular blissful ignorance or ostrich mode, where companies are like, oh, I'll wait till they get it under audit, which I am always against because you're always adding interest and penalties on that. However, if it takes too much effort to comply and you have to go out and hire a full-time resource plus benefits, it can be challenging. So what companies then do is they may estimate. So they'll do a rough calculation, best guess for a lump sum payment They'll do a manual paper invoice sampling in a batch, and then they'll create a percentage, and they'll just use that to do an estimation every month or quarter or year. A spreadsheet manual audit, so they'll take a subset of invoices, and then they'll allocate that across an audit period to try and create that estimation. Then there's the manual assessment. And I have to say, I see this the most of the companies that do try to support the consumer use tax accruals. And that would be where they do a manual inspection at the time of invoice. The challenge with that is that a lot of times an AP person will be inputting the invoice into the ERP, and they may not know what the tax treatment should be for that. So the tax person has to put together some sort of rules that are not hard and fast and are often based on interpretation. So it is a challenge for organizations to comply with the consumer use tax situation. And then there's the manual batch inspection, where they take a batch into a spreadsheet, and they look over that spreadsheet, and they look over a couple data elements, try and evaluate if they can determine if there should be an accrual for use tax or not. And those are time-consuming exercises, and is not always the best use of your resources to determine that use tax exposure. And then, of course, there is...
Oh, sorry. Hey, Diana, can I interrupt you for a second? I know that
Sure.
I talk to a lot of businesses, and when they look at the cost of automation or the challenge of putting this together, everybody seems to think that you can get a person to do this. And you
Right.
can't, right? There's just a person, one single person. I mean, unless you're Diana, no. Most people can't and really don't want to just try to do this manually, include things together manually. Diana, I always joke, I throw my niece Chloe under the bus, right? She's in college. You can't really just hire Chloe to do this. You need resources. You need help. You need to do this. It's really hard. It's not something. So I caution you when you're thinking of automating to not think of automation versus a person. They are two completely different things. A person have the knowledge that automation can. So it's my 2 cents.
Great. And that's valid. And then you can't really, if you outsource, it is often an expensive undertaking. And it's either done through like an external multi-year audit, reverse audit, where a firm will come in and take all of your AP invoices for the past few years and do an analysis on that. Well, that may not provide them with all the information, all the context around those purchases and how they were used and the movement of goods. So it's important to really understand what you're doing. You may be paying more tax than you need to. And outsourcing the entire process to Big 5 firms or Big 4 firms or to other organizations that will take on that process. But that's usually wrapped into an AP process. So you can't get that tax expertise. And especially with the state and local tax stuff, it's often hard to get a firm that can really address both the technology needs of your ERP and your AP process and fold in the sales and use tax. Because I'll tell you, they usually don't teach sales and use tax when you get your master's in tax. It is a tax that's often left uncovered. And I always say it's more art than science, but it is a big exposure point for companies or organizations, especially those that are public and need to include any exposure in their contingencies. And then finally is automation. And some companies really do this well. They identify ways to feed their AP information into a solution that will calculate that tax for them and make sure it identifies any shortcomings on the vendor invoice or identify even overpayments for that vendor invoice, because you don't want to pay too much tax to your vendors. And then the comment here that I want to point out is that one of the senior tax directors that we spoke with for a leading software company estimated that 95% of the companies out there do not handle it right. And I've been around this industry for a long time, and consumer use tax has been a pain point in all of the years that I've been working in the sales and use tax industry. And technology has really taken quite a long time to catch up to the needs to capture the consumer use tax exposures. So let's go through some numbers. So here's some statistics. 14.4% of audit violations for cut are on out-of-state purchases. The number of states that charge consumer use tax on SaaS is 19. The maximum years that Nevada may audit if you're not registered for consumer's use tax with them is 8 years versus 3 years. And if they deem that you were fraudulent, then the statute of limitations goes away. So that's for all the states. If they feel that you were fraudulent or didn't intentionally file your return, then they can go back and look back forever. And then $763 million is the estimated uncollected consumer use tax in California in 1 year. So we have this number from 2011. I'm willing to bet that it has only gone up from there. The states are really looking at a lot of revenue deficits as a result of the pandemic. And Nevada specifically, well, California and Nevada both have huge projected shortfalls for 2021. So I think, I don't want to state the numbers because I don't have them right in front of me, but it is a significant amount of money. And I actually do have the numbers. So Nevada projects 26% downturn in their 2021 revenues, which equates to $1.2 billion. And California is 26 to 32.2, I have billion here, $1 billion, which is a lot of money. So, but their shortfall is less of a percentage than Nevada, but because they are the third largest economy, I think, in the world, they have a larger amount of money. So $475,000, that's the audit hit to one company for a single consumer use tax mistake in 1 year. So I've dealt with consulting with a number of companies, and it really causes me concern when I have to bring the bad news to the CFO that their exposure, if they were audited by all the states they were exposed in, would put them out of business. And it has happened to me many times. So it's just a cautionary tale to see this and to know that the states are out there looking for this money. 80% is the amount of audit assessment dollars due to consumer use tax. That one bears repeating. 80% is the amount of audit assessment dollars due to consumer use tax. That's a lot of assessment dollars. And as Maria mentioned at the beginning, when the auditors come in, they are going to look at two things first because they know that's where the low-hanging fruit is. They are going to look at all of your purchases, especially your credit card charges, and then they're going to look at your exemption certificates. And that's where they get their assessments from. Because as Maria said, it's fairly easy if you use automation to get the sales tax part of it right. The consumer use tax part and the documentation for your exempt customers is where a lot of that exposure is. So why consider automation? Well, one of the biggest reasons is productivity. So you want to minimize the time it takes for resources to do this analysis, because you'd rather have your resources working on revenue generating items than trying to figure out where you didn't self-assess use tax. So manual calculation with spreadsheets. You know, I love Excel. I like playing in Excel, but I got to tell you, doing calculations with Excel is painful. Outsourcing to CPAs can be costly, depending on the types of firms that you use. And if you don't use a firm that specializes in state and local tax and really understands the sales and use tax world, it could be costly as well. From an exposure perspective. Lost margins, so the extra cost from overpaying taxes. So the SaaS software example is the primary example for this, where you're paying sales tax in a high tax state and using it in states where it's a lower tax rate. So that example, if you purchased that SaaS software in Seattle and then you had users in California and Texas, you had opportunity there for a lower tax rate and risk. So 80% of all of those taxable sales or all of those assessment dollars were for consumer use tax. So that's a big amount of risk. So how can we help? So this is the part of the presentation where I get to explain this is the easy way to do consumer use tax. And Maria, feel free to jump in at any time as I'm going through this.
I was just going to say, Diana, if they're still here, like if they're not overwhelmed by all that stuff, if you're still with us, this is all that.
It is. It's a challenge, and even you know, even organizations that typically don't have a tax liability may be doing things that can create this exposure. And one of the examples from past history, I don't know if I read it in a court case or I came across it in one of my consulting experiences, was a church who had a coffee house attached to it. And they got hammered under audit because all of those expenses to support the coffee house activities, that was all taxable. And they did not accrue any use tax for that. They didn't cover any of that. And it resulted in a significant loss for that church. So even a small organization can be impacted by this consumer use tax situation. So what we do at Avalara is we provide our customers with a tool. It's an offline self-assessment workflow automation tool. You're like, what does that mean? It takes data in, you import data. It is totally ERP agnostic. You can take data from any of your purchase system, your expense system, and put it into an Excel format. And then we have a mapping tool that allows you to map your file to our data. And it's an easy process. And then you import that file into the ACU tool. What you do is you identify the rules. So there are rules that you can create that are going to determine, hey, this vendor always charges tax. We don't even need to look at that. This cost center, it's always exempt. Don't even look at that. We don't want tax charged on that. So you can build your rules and then calculate the tax. And then once we calculate the tax, you have a comparison between the tax that was on the vendor invoice and the tax that we calculated. You build rules that say, hey, I want to always say that the AvaTax calculated tax is correct, or I want to always say that this vendor is correct. So there's rules that you build based on items that you purchase, vendors, cost centers, custom fields. So you have an ability to build a learning system that's going to know what to do with those transactions. Once the review is done, some of the transactions are automatically going to be processed once the calculation is done. So it's going to identify, here's a use tax accrual that I need to do, or this transaction is okay, or this transaction, the vendor charged us too much money. Then you will allocate and edit any of the ones that you really need to review. So it's pulling out of the universe of all your vendor invoices, all of your expense transactions, the ones that you really need to look at, that really need human intervention. So it's taking the universe and boiling it down to a small number of transactions, allowing you to make a determination, and then will commit those transactions. And when I say commit, that just means that it creates an accrual so that your use tax can be included on the return for that state that it needs to be accrued in. So it's a recalculation tool. It's going to look at what was charged, and it's going to calculate the tax and do that comparison. And then based on the rules that you will help you build, it will determine whether it should just go with that transaction or if it should create a use tax accrual and put it on the return. So here is the process automation for consumer use tax self-assessment. So I told you about the rules. So it's got built-in rules and rates, and that's going to do two things. It's going to be rules that you build to configure to handle the transactions that you know need to be dealt with in a certain way. But it's also going to track jurisdiction regulations that are going to support that ongoing compliance. So it's going to know that that SaaS software is exempt in California and taxable at 80% in Texas. It's going to, the rules that I talked about, you're going to identify transactions or line items to ignore or accrue. It's going to look at the GL cost center or taxability code assignments that you put in there. And there's going to be decision criteria annotations. So it's going to track all of those changes that you make or all of those decisions that are met through the solution. And there's going to be transaction flags where a human needs to review it. So when you build the rules, you're going to have a number of transactions to review. But as those rules are fine-tuned, that number of transactions to review will go down each month. It's really a powerful tool, and it's a learning tool that allows you to really automate that process more so than any other solution can do it. And again, we talked about the taxable events that occur after the original invoice. So anytime you're withdrawing inventory, you have a goods movement, or you have some other taxable event that's going to require you to accrue a use tax, you have the ability to capture that here. There is a flexible transaction import from any source. So I told you, you can take that CSV file or Excel file and you can map it so that you don't have to do a lot of data transformation. You map your data to our data one time, and then every time you just upload your file. Multi-location allocations capability. That's a mouthful, but basically what that means is you can identify transactions that are automatically going to split that transaction to accrue across multiple jurisdictions based on a percentage. So if I have 100 employees and 75 of them are in Seattle, or 50 of them are in Seattle, 25 in California, and 25 in Texas, I can create that percentage of breakout anytime that a SaaS software comes across as a purchase item, or anytime that the IT cost center comes across. So it allows you to split those item amounts for that accurate accrual and itemization. And then powerful reporting. So you'll have information to do your process control. So there's an audit within each transaction that identifies every single action to that transaction. You can create your journal entry reports so that you can import that transaction or those transactions into your GL for accuracy. You can do liability analysis, and then you have decision documentation for audit support. So when the auditor comes in and you present them with the report of the information that shows this is what the vendor charged, this is what we accrued, they're going to be so disappointed that they're not going to be able to assess you an amount. They're going to leave. I can't guarantee that, but so it just gives you that additional level of documentation for audit support so that you have no doubt that you've done the correct thing and you have limited exposure. And then finally, why our customers like using Avalara Consumer Use Tax. It increases cash flow and reduces expenses, so identifies overbilled sales tax on purchases. It allows them to gain control over the consumer use tax, so they're not relying on AP clerks to input the information accurately. They have that control process to ensure that that's getting calculated correctly. It improves productivity. So you don't have some of your staff accountants doing spreadsheets to try and figure out if there is a use tax exposure. And then finally, you integrate transactions from multiple systems and business processes to a centralized consumer use tax self-assessment that goes across the organization. So think about it. Your purchases that are going to come through from your AP feeds, your purchases that are going to come through from your expense reporting solutions, all of that can be centralized within this Avalara Consumer Use Tax solution. And that brings us to the questions. So Perfect. Do we have any questions?
Yeah, so thank you, Diana and Maria, for that great presentation. It looks like we do have a couple questions. Don't forget, though, you can still submit them into the Q&A and we'll read them out. So let's see, our first question we have here is going to be, we do not centralize purchasing and want our location managers to be able to review their expenses. Is this possible?
So yes, within the ACU tool in Avatax, you are able to set up multiple locations. And even if need be, if you have different divisions or different entities, you can set up different companies within the system. So you'll have that ability to give them a customized view into the data.
Okay, and then the next question is, what format do I have to have my information in to use this product?
So as I mentioned, you would have a CSV file. Typically what our customers do is they provide us an export of their vendor invoices. We have one customer that uses a OCR system to create a file from their vendor billings or their vendor invoices. We have another customer who exports directly from their Concur expense solution. And then, of course, we have customers who are on NetSuite that will just do a vendor invoice export out of NetSuite or a vendor bill export out of NetSuite. And then that can be mapped to in our file mapper so that they just have to import that.
Okay, and it looks like our last question we have here is, what accounting systems does this work with?
So because it is outside of the ERP solution, it doesn't matter. It is totally platform agnostic. And that has been the challenge with consumer use tax for companies and vendors providing a solution, is that a lot of times the taxable event occurs after the vendor issues the invoice. So anytime you have a goods movement, inventory removal, anytime that you have allocation from centralized purchasing, that information isn't necessarily captured at the AP point of the ERP solution or the accounting system. So this is a great way to capture that information. We even have customers who we have a number of connectors directly into ERP solutions, and they will use this with their AP solution in addition to the connector that does the real-time call to Avatax. So they use this as the cleanup after the fact. So they'll do real-time calls with their AP solution into Avatax to get that vendor tax verification done. And then after the fact, they will feed additional data into a file and into Avalara Consumer Use Tax to make sure that they capture those transactions like goods movement. If you have equipment in multiple states, it's important to capture the use tax liability as you're moving that equipment, or inventory removal, or any of those after the fact types of transactions.
Okay, it looks like that's all the questions we had come through. And then the next slide.
Oops, sorry.
No, you're fine. So here at JMT, we love helping nonprofits achieve their missions. So if you know of a nonprofit who could benefit from our services or solutions, please send them our way through a referral. As a thank you for helping us connect with them, we'll send you a $25 Amazon gift card. And if they become a client, we'll give you $500 for either yourself or a donation to your nonprofit. All you have to do is just visit jmtconsulting.com/referral to learn more or submit your referral. And with that, that concludes our webinar today. Just want to thank Diana and Maria again for leading us, and thank you everyone for being here. We hope you enjoyed the presentation. And as just a reminder, we'll send you the slides and the recording for this webinar by tomorrow. I hope everyone has a great rest of their day.
Thanks, Lauren.
Thank y'all.
Thank you.